Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, June the 27th. Yeah, my name's Eric Wilkinson and you may recognize me as the Wolfman. I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, we get this started off with some economic data across the pond. We got Spanish flash CPI, which is Consumer Price Index, coming in lower than expected at 0.4%, expected to be at 0.8%. Then we move back over here to the United States. Actually, German preliminary CPI come in at 0.3%, expected to be 0.2%. And then back here in the United States, we got final GDP, gross domestic product, and that came in line with expectations at 3.1%. Final GDP prices index came in at 0.9%, which is higher than the 0.8% expected. Then we got initial unemployment claims came in at 227,000, expected to be 220,000. So whenever we have more people claiming for unemployment, that usually is a bad sign, meaning they're not getting hired. But you know, sometimes we've talked about this in this expansion phase that we've seen since the last recession, that a lot of times we'll see those unemployment claims spike because people start looking for more jobs. Now, we're at a situation where the job scene and the expansion may be a little bit fuzzy, and these jobless claims could be an indication of some weakness. So it's a different type of environment now. Before, we were kind of looking forward to seeing some of those unemployment claims come up because that meant people that were unemployed before weren't looking for a job. They'd fallen off of the statistical unemployed line. They become a discouraged worker and they don't show up on the employment numbers. But now, after the expansion, you continue to see this. That's not usually a good thing. All right, so pending home sales coming in at 1.1%, which is in line with expectations. And finally, we got natural gas storages was a build of 98 billion cubic feet, expected to be 104 billion cubic feet. So should, you know, less supply and higher demand should drive those prices higher. I doubt there's a whole lot of demand because the Midwest is starting to feel some heat going on, and I don't know that people are going to be using that much natural gas going forward this summer. All right, sorry about that. Anyway, let's get on to the overall markets. We've got crude oil unchanged, maybe up 4 cents but right now, but wanting to test that $60 a barrel like we did yesterday. You can see yesterday we came up and basically kissed that, coming up 7 cents shy of $60, but that was something that the market wanted to test, right? It looks like it got rejected at this point, but today's market action not really making this look like a top. You know, usually we're talking about, and we're going to see something very similar to this in the E-mini S&Ps, but you get a doji like this, you know, at the top of a move. Let's just say you got your moves going like that or whatever, however we get it. You get this kind of at the top, and then maybe the next day you get a confirmation to the downside. That means the market wants to roll back over, right? Well, right now, what we're seeing is we've got this doji here, the one that I'm talking about. So we've got a topping doji, it looks like, maybe a little bit extended, kind of like that. But then now we've got another doji that's going to end up looking somewhat like that. Well, in a market that is in an upward move like we're seeing here, that usually is a continuation pattern, okay? So if we were to end up like this right now, it would make it look like a 60 handle is sure to follow. We'd probably then go to look to test this $63 a barrel, but you know, we really don't want to see that happening for the economy's sake. All right, gold futures off about $6.50. Again, you know, a lot of this is dependent on China and these talks that we're having with the tariffs and everything else. One of the biggest points of contention here with the China tariffs, you know, everybody's talking about the tariffs as the biggest part of it. 50% of it is the fact that we want them to not steal our patents. I mean, as crazy as that is part of that negotiation, is that our patents should hold weight in their courts, and right now it doesn't hold any weight. So that is one of the biggest bones of contention, and I can kind of agree with that one. I mean, it's all about your intellectual property and somebody stealing it. All right, we've got the bonds 155 handle still intact. Came down and tested the Fibonacci 61 fib here yesterday and overnight, actually. More of an overnight test than yesterday. Yesterday it was looking like it was going to be there for sure. But today we tested that 154.22 and which lines up with the 61 Fibonacci, and we've bounced up and away from that. So this, I believe we're probably going to be stuck in a holding pattern until we see what happens really finalized with what's going on with China, because the bonds are very dependent on this. If there is no negotiation with China, that is going to influence what the Fed does. Now, if the tariffs are lifted in China, well, then the Fed could probably leave rates unchanged. But if the tariffs go up, the Fed probably has to decrease interest rates. So right now we're in a holding pattern. Fed is very probably concerned about what's going on with these meetings today, and going to be really trying to figure out what their next step is. All right, VIX slightly higher today. Even with the equities higher, we've got the NASDAQ up about 29 points here. Yesterday, very inside day. It doesn't look like a very good chart pattern here. Very messy right here where we're talking about, you know, we would think that maybe that type of a doji, you know, when we get something like that at a move after, you know, we got that big one. Then if you got confirmation where it was looking like this morning, you know, you start out here and then create a confirmation pattern. All right, well, we haven't gotten that type of setup, which would be the easy setup, right? It's looking like we're kind of stair-stepping up, and I'm wondering if the stair-step up is going to be lost, because some of the other charts look a little bit better. You know, with the bottom here, this looking like a very much of a confirmation. That's kind of like the setup I just showed in the last example there, but a settlement near the low of the day or below where we opened overnight would really make this look like that is going to continue back down to the point of control and test that 2900 handle. But as of right now, or any higher, settlement above yesterday's wick, right here, if we got that green bar to kind of make a settlement and look similar to something like that, then that would be very bullish. It would make it look like we found that little bit of a bottom there. Right now, it actually looks like we're creating a bottom, even if we settled right where we are right now, because we got two dojis that are very similar and respect of one another, and that could really make it look like a nice little bottom. But when we go over and look at this chart, it looks like it's just an inside day. Market settling down right around the point of control of yesterday, the value area high and low inside of that. Again, very much kind of setting up for what happens with these meetings. All right, and then let's move on to a couple of things I'm looking at. Kellogg, I need about another 50-cent drop here in Kellogg in order to get out for my 50% increase, or my like double, I should say. It's actually 100% increase of the premium I paid for this, which is what I was looking to get into. And I did it in the July. I bought the 55 puts in there for $1.40. I'm trying to get out for $2.80. The highest I've seen is $2.50. So it hasn't gotten close. That's what I'm talking about. It's about a 70 delta. So if I got about a 50% or 50-cent drop from here, that would actually allow me to get out, because it's right, like I said, around $2.50 with a 70 delta. I get a 50-cent drop. That's an extra 35 cents. Well, that's it. That's, lo and behold, what I need for this trade to get out of it. So looking for that. Hopefully we can get a little bit more of a move to the downside today in Kellogg. And then with TLT, you know, we're stuck in a pattern here. This is what I've been talking about with the Fed. You know, the Fed is dependent on China, and they are going to be very closely monitoring that situation, as am I, because I have on the July, I sold the July, I sold the 135, or sorry, 134 calls in there, and I originally sold those for I can't even remember what I sold those for. I might have to check it out for TLT. I originally sold those for $1.02. Sorry, trying to get back out for 50 cents right now. Trying to get 50 cents right now. It's trading 64, so I'm a little bit off the market there, but definitely looking to cover those two trades for my profit targets that I've talked about in these market commentaries. You know, follow your plan. Because plan your trade so that you can trade your plan. And I write that stuff down so I'm mechanical. I can remember what my thought process was, why I got into it, and what I'm going to do to get out of it. And I'll talk about all of those types of situations in today's webinar, how I set up trades and build them. Like, we come up with a market assumption. Let's just say TLT we thought was going to stay in and around this area with high implied volatility. We got high IV percent or something. Well, so now what do? We've got our market assumption. We've got all of the data that we need to come up with a strategy. Well, what's the best strategy for this type of scenario that we've just come up with? And I'll show you how to go through those steps to find the right strategy for the right situation and the right underlying, okay? So I make it very simple, try and break it down so that it's layman's terms, little easy things that you guys can do to remember some of this stuff. So check it out and let me know. Also, follow us on Facebook so that you can get access to these videos much quicker than having it sent to you in an email, all right? So if you can't take that, take it easy.